First, look, we're talking today. Bitcoin's making higher highs. Cryptos across the board are making higher highs. So the $1 million question for you, Eric, right now is, is it too late to get skin in the game? Is there still room here?
There's a lot of room. Just how you define that, though, is when it starts getting to be a little bit more interesting and a little bit more fun legwork that you can do. We tend to think that Bitcoin and then the technology and the cryptos that are built on top of that follow it tend to have longer cycles. It's, to me, fascinating because sometimes we get really into the short-term moves, a few months that it takes to move from 10,000 to 50,000 or something like that. And it feels like it moves really quickly. But in reality, Bitcoin and cryptocurrency cycles tend to play out over the course of years. And I like to think just round numbers, easy thing for you to digest is, I think we're about a year into a 2-year cycle.
Wow. Okay, so if I'm interpreting that correctly, a lot of room to grow here.
A lot of room to grow. Now, obviously, with Bitcoin's legendary volatility,
right?
And we've got other, and we'll talk about this a little bit more in depth in the webinar, that we can really dig into it. But we've got other factors that we have to pay attention to, and what's on everyone's mind is dollars being printed and money sloshing around the world and stocks at these outrageous valuations. And what are these other factors? How are they going to affect cryptocurrencies? And will cryptocurrencies de-link from them? And yeah, definitely we'll spend more time on that on Wednesday.
Well, let me ask you this, and I'm sure you've heard this ad nauseum, how people have compared the Bitcoin rise to a bubble and likened it to the .com bubble of 20 years back. And of course, what we saw in Amazon and Apple, they survived, but their stocks dropped dramatically over the course of that time. So when people say that the cryptos are a bubble, what's your response?
Well, this sure looks like a bubble if you look at it from one direction of cryptocurrencies. But at the same time, I think that the comparison to NASDAQ or .com bubble back then leaves out the inarguable tenet that this is a different monetized asset than .coms were. And I think if you look back at the .com bubble, it was back in a time when the word of the day was eyeballs and clicks and stuff like that, right? That all anybody could think about was, let's get some traffic. And those were the holy grail. Let's get millions of users. Let's get tons of traffic to our site. And certainly Amazon and Apple survived that. Now their stock prices dropped, and there's no real pure comparison between cryptocurrencies and equities. But then you have to factor in, like I just said, that the cryptocurrencies are monetized differently from the beginning, that you can't touch Bitcoin, you can't interact with Bitcoin, you really can't do anything with Bitcoin itself without some Bitcoin being involved. Now, maybe it's just a fee that is $2 or $5 or something to move money around the world. But that's the major difference, that .coms, a lot of them were built overnight with no thought to, and every time someone clicks on something, some money changes hands. And that took a decade to build into it. So I think that cryptocurrencies, because they were launched with proper monetization from the get-go, they're decades ahead of where .coms were at this point, or at that point.
Let me ask you this. Let me ask you this then, Eric. Fed Chair Jerome Powell over a week ago came out saying that Bitcoin, if you want to compare it to anything, it could be compared or be a substitute for gold. But it cannot be a substitute for the US dollar. Now, yes, of course, he has a certain agenda to push. But what did you make of these comments?
I'm glad to see him at least in the context of that, admitting that gold and Bitcoin are more sound currencies than the US dollar. Now, obviously, that's not the wording he used.
I don't think so. Yeah.
Jerome can't print gold. Jerome can't print Bitcoin. Jerome can print dollars. So he's right. There's less of a similarity. And the fact that there's $19 trillion worth of dollars sloshing around out there, and people should think to themselves of, if I wanted to trace back, if I own dollars, if I was a shareholder in dollars or in the United States currency system, if I had a lot of my wealth in dollars, could I look back and say, where did these dollars, what's the purpose of them? Who's creating these dollars? And we talk about it a lot with, with just terrible stories about, oh, they're printing dollars. But the idea is, if you wanted to chase them down, you can't. And with Bitcoin, you can. And gold, 10,000 year store of value. It's I'd rather be likened to that than to a currency that is perpetually losing purchasing power. So thank you, Jerome. I'm glad to see you coming on board.
Yeah, and you're one of the few Bitcoin proponents out there, Eric, that also values gold and sees a place for gold.
Yeah, I absolutely do. And I don't know if there's a better way to describe it than just gold has a millennia long store of value. And it doesn't have the same technologies as Bitcoin. And they're different, but I think they have more similarities, more overlaps. And I also think that Bitcoin's famous volatility is different than gold, much different than gold. So I like them both. I think to say that gold has no place would be like saying that real estate or fine art or in a good investment in a nice bottle of wine or something, or a good classic car. They're all different. They all have a place in a reasonable portfolio.